You're watching Storyboard at AdAsia 2011, and I'm going to be talking now to Michael Roth, the CEO of the IPG group that has the second largest market share in the Indian advertising and media business. Michael Roth, good to have you here in India. In what is your first visit?
It's a pleasure to be here. I'm very excited.
What has it been like? Because it's just been 2 days, and yet you know, IPG is the second largest media and advertising agency company, isn't it, in India?
Yes, it is, and it's been exciting. I think the passion for the business and the work and our people have been terrific, and I think the growth of the markets here has been very strong, so it feeds into that. So I'm very excited to be here.
So have you been at AdAsia, or did you manage to visit any of the agencies and the agency offices here?
Yeah, well, last night I hosted a dinner for all of our people, and we had some people come in from Pakistan, some people from Mumbai, of course, and it was great to have everyone together and really feel the excitement that we have for our businesses here. You know, our growth here has been terrific. We announced on Friday our results, and India in the third quarter grew 19% for us, and for the first 9 months over 20%. So this is an exciting place to be, and it's a great success story for us.
Given that this market is growing the way it is, how important is the market share battle for a holding company? Because we are talking in the same week that Omnicom has finally managed to raise its stake and therefore get a little more play in the Indian market.
Yeah, we still, even with that transaction, we had a very strong presence here, and we continue to be the number 2. And our emphasis is to service our existing clients first, because a lot of our growth is coming from our existing clients. And of course, as new business presents itself, to win our fair share. So recently, McCann World Group here in India just won the GM account here in India, and Aircel. So those are 2 nice wins. So not only we are growing our existing clients, we're growing our new business. So that's why you can tell I'm excited about being here.
So we know that you launched Reprise last year in the digital space. Would you be looking for acquisitions? And if you would, in the traditional advertising business, you have the really small creative hot shops that are grabbing big accounts. That's one trend. And then you have the mobile and online businesses that are cropping up. But otherwise, is there anything else that you all would look at, could look at?
Yeah, unlike the transaction you were referencing, we don't need to acquire a network to give us a presence here. So whatever transactions we're looking at will be bolt-ons to our existing offerings, which is the way we like to grow in all the geographic regions that we're in. So we add to our capabilities. If it be digital, we'll be looking at digital. The creative hot shops, eventually, they need the breadth and distribution of a global network, and so eventually they like to come on board to one of our networks. So
you're watching those very closely.
We're watching them very closely, and as we've done for years, eventually we end up doing some form of transaction with them, because it's talent. This industry is based on very strong talent, and if we see an opportunity to bring new talent into our ranks, we will do that. So we do transactions a little differently in that our networks themselves drive our transactions. So if our networks are partnering with a particular agency or discipline and they like what they've seen, they'll raise the opportunity with us, and we obviously will support them from a capital point of view to move forward. So and I hope to see some of those transactions coming up.
So you had $150 million last year for acquisitions. How much of that have you managed to spend?
We spent a fair amount of it. We did
none of it here.
Well, a small amount here, but we expect to see that increase. What we do is we set aside for budgeting purposes an amount for acquisition. So for 2011, we had set aside about $150 million. And we did, I believe, 11 or 14 transactions throughout the year, and we spent most of it. But we also, as you indicated, had a share buyback of $300 million. And actually, we increased our share buyback to $450 million with the Facebook proceeds. So we have capital. We're very strong from a financial point of view. And at our dinner last night, I met with all of our people, some from Pakistan, some came up from Mumbai. And I said, you know, if you see attractive opportunities, we will take a very close look at it.
We'd like to go shopping.
Yes, it was so, you know, normally when I meet our people like that and I make that statement, it's not too long before all of a sudden we see opportunities. And that's really what we want to do. We want to see the local agencies and networks develop those relationships with potential transactions.
So, you know, the turnaround story at IPG that you have steered over the past 4 or 5 years has been, you know, well documented. And early this year, I think there was a sort of a sense of, you know, having turned that corner. And yet, we know about that story where that stock price took a huge tumble just a few weeks ago. So what is the reason for that, and why are people speculating again that it's time for, you know, the rumors that IPG you were plagued with, you know, is that a one-off speculation that we shouldn't bother about?
I think what you're referring,
what's happening there?
It wasn't a few weeks ago. What it was is our second quarter results. Okay, and on $1.7 billion of revenue, we missed by $26 million. And in this uncertainty in terms of the environment, people felt that there was risk associated with that. And in fact, one of our analysts said, we've now moved into the show me stage again of IPG. Well, with our announcements on Friday of our earnings, even that analyst said, we said show me, and they actually showed us and then some. So that issue is behind us. We had a great recovery in our share price before this recent downturn. So I think the uncertainty of the turnaround that was occurred in this second quarter is behind us. This Friday, I reiterated our goal of 4 to 5% organic growth, at least that, and 9.5
to 10% margins in that context.
And I reiterated that, and I believe I know we're on track to deliver that. So I think that little bump in the second quarter should be behind us. Now, of course, there's the market uncertainty, but that's a lot different than any issues about IPG.
The European crisis, we've spoken about it now for about 2 years.
Right.
And, you know, it was pigs last year, and now it's only Greece, you know, in the starring role. You had said in 2010 that, you know, you weren't expecting Europe to recover so strongly, so the kind of numbers you were putting out for IPG had taken into account that Europe is not going to recover strongly. What is the scenario today with the kind of impact we are seeing, you know, the uncertainty in Greece causing, which is, you know, the bailout and then possibly a referendum and possibly political instability?
Well, certainly in Greece in particular, you know, we have a presence in Greece, and obviously that, but it's not significant at all. As far as the spillover to Europe, you know, we have seen a bit of a softening, but frankly, for the first 9 months, we've had good results in Europe. And we weren't counting on a strong recovery in 11 either. So we're on track with respect to our performance in Europe. So that's why I'm comfortable in saying what our targets and how we, you know, I'm comfortable in achieving those targets, because we weren't counting on a big recovery. What we were counting on is great growth in the emerging markets such as India, China, Brazil, and we're seeing that. So, and in the United States, in the third quarter, we had 10% organic growth, which is, we outperformed all of our peer competitors.
And that's about 60% of your total revenue
60% of our revenue is North America, 20% of our revenue is Western Europe, and 20% is the rest of the world, which includes Asia-Pac and LATAM.
So your business, IPG in particular, and the advertising, communications, marketing communications business, you don't see getting impacted by the fallout of what's happening in Greece, you know, and contagion from there?
Well, we haven't seen it yet, okay? And you know, we still have our fourth quarter to come through, and a fair amount of our business, of course, comes in the fourth quarter. But we haven't seen major pullbacks. We've seen some softening in Europe, but as I said, we took that into account. But we haven't seen it. And in 2008, which is what everyone is comparing this to, in December is when it first hit us in 2008. But this environment is different. Our clients have cash. There's access to the capital markets. So I believe this isn't 2008. There's uncertainty because of the turmoil, but our clients are investing in their brands, and they're spending marketing dollars. And right now we're in the process of putting together budgets for 2012. You know, I believe that this is not 2008, and we'll be able to get through this.
You mentioned, you know, the Facebook
Yes.
stake that you all had, and that a bit, you know, the tiny stake and a bit of the tiny stake that you all sold recently. What is your sense? Because not just as an investor, but also because, you know, executives from IPG, your clients are on Facebook's advertising council, isn't it? What is your sense of how Facebook is managing to leverage advertising?
Well, I think the growth of Facebook has been enormous, and it's a real force in our industry. And it's part of the integrated offering that we offer to work with our clients on. And it's a mistake to not include that in what these offerings are. But it's just a piece of the total offering. Our investment in Facebook, as you said, when we sold it, we had a chance. We only sold half of it. And we sold it for $133 million with a gain of 131. So that wasn't a bad day. But we still have half of it, and we're excited about the investment. But it's not a strategic investment for us. So what that means is, if the price is right, well, we'll sell the other half. But you know, it's distinguish our investment in Facebook to the phenomenon of Facebook. And Facebook is a real force, and we work very closely with Facebook, with our clients, and we will continue to do that. Given
that you know, Facebook is growing phenomenally, you are still invested. Why would you not look at putting in more money if that company is supposedly valued at upwards of $60 billion?
You know, it's an interesting question, because you know, we're not a mutual fund. We're a marketing communications company. When we first invested in Facebook, it was to get the strategic knowledge of this new phenomenon and us to learn more about it. We don't invest our money just for the sake of investing in stocks. We invest in relationships and competitive advantage in terms of new technology.
But wouldn't this be a strategic fit, given that you know, marketing communications companies are looking to understand digital and offer digital services to their clients?
Yeah, but we have that already. So you know, we view our investment in Facebook as purely as a stock investment now, not strategic. That's what I meant. Now, we have an emerging media lab in New York, where and San Francisco and LA, but most recently opening in New York, where we're experimenting with new technology and new opportunities, and maybe we'll see a new Facebook come through our emerging media lab. But it's for the strategic rationale of how we can use these resources with our clients, because that's what our business is. We're not a stock investment company. I used to do that when I ran an insurance company. But no, this is a marketing communications company, and if we do make investments like that, it's for a strategic reason.
From 2008 onwards, we know that North America has been jolted as a nation, as a set of consumers, as an economy. We saw the sovereign debt downgrade. We know, you know, what happened after that. We know of the government in paralysis. But given all of this, we still, till recently, we didn't see people expressing discontent. And we are now hearing and reading about the Occupy Wall Street movements, which are, you know, in your city, in New York, and gaining ground across the world. How does this impact consumer sentiment and confidence? What are you reading?
Well, you know, what's clear is that there's a disconnect between a group of people who are financially very sound, they have jobs, they're doing very well economically, and the unemployed, and the fact that they're struggling to pay their bills. And it's not just in New York, it's frankly all over the world. And with the advent of the internet and people being in a position to voice their concerns about their opportunities, we're seeing this phenomenon. I think all it is an indication that it's a message to all the governments, not the government in the United States, to get their act together and focus on real growth. Now, because we are posting good results, and a lot of corporations are performing reasonably well, but they're doing it by focusing on the cost side of the business. What we really need is growth in revenue and real growth, so that jobs will return. And I think that's the message that we're seeing down in Wall Street, and that is they're looking for the government to stop political bickering, to put aside political objectives on an individual basis and focus on the real economy. And that is what we have to do, is invest in growth and job opportunities. And I support that. I mean, I think that's the strength of an economy is in the ability to put your people to work. And so, you know, we grew 2% this last quarter in terms of hiring. And I'd like to see that even higher. And in order to do that, we have to see stability in the global markets, and we have to see stability in terms of the governments, in terms of where the economic forecasts are going to be. So I think it's great to have the voices heard. It's when it spills into violence that I think it creates the problem, and then we have consumer confidence being affected, and that's how it would affect our business.
If it were to go that way, but as is, it's not something that you see directly impacting your business.
Not yet, but it's growing, and I think the message is very clear in Washington, in Europe, and that is fix this.
You just talked about your career. I mean, you mentioned your, your career as
Right.
a finance guy. How are you personally reacting to these protests? Because there is this whole questioning of capitalism and whether it's the right system and all of that. As the money guy, how do you react to all the intellectual debate that's being generated by something like this?
I think the debate is a good debate. I think it's wrong to pick a particular sector and point fingers at saying that's the sector that's responsible for all of this. I think certainly there were some missteps in the financial markets. There's no question about it, and some people acted in a way that certainly one would question their intent and their personal objectives. But I think the real question is how, as a society and as a government, we're approaching this. The scapegoats are easy to pick out. And there is greed out there, and people act in an inappropriate way. But overall, I think corporate America and big corporations are acting very responsibly. And every once in a while, there's a rogue, if you will. But the real issue is fixing the macroeconomic environment, and it's going to take a global fix. And I encourage, we have the meetings coming up now in Washington. We have the super committee. I hope they all get there. I'm on the business roundtable, and I'm in Washington, and the message is very clear. Fix this so we can get to real growth and put people back to work. And that's a good message.
Michael Roth, thank you. Enjoy your India visit.
It's my pleasure. Thank you so much.